Hello everyone, welcome back to Financial News. I'm Ron Jankowski with Paul Munico from Ameriprise Financial as my co-host. Today is September 12th, 2022. Paul, lots of activity took place last week. Give us an update.
Absolutely. Looking at U.S. economic activity, it has been slowing in recent months, though we still expect real GDP to be positive in Q3 and Q4. Now, around the world, the same forces are rising interest rates, high inflation, droughts, energy market dislocations, and continuing intermediate economic lockdowns in the world's second largest economy, which is China, should be expected to weigh heavily on growth over the intermediate term. Now, with additional interest rate hikes likely still to come in most areas, global economic growth in 2023 is expected to be a bit softer still. Now, not all areas, however, are expected to see slower growth next year. We've got data that's sourced from Moody's Analytics that shows growth is expected to improve in China and Japan, while remaining relatively strong in India. Moody's is still looking for some growth in the Eurozone and the UK, however. We believe ongoing energy constraints in the form of shortages and exceptionally high prices, combined with higher interest rates, are more likely to economic activity contrast modestly. So growth rates going to be fluctuating, of course, with energy prices we've talked about in the past. Just something to keep our eyes on moving forward.
And Ameriprise had submitted the following to us this morning to read. The U.S. stock index futures are higher again this morning after a strong Friday broke a 3-week losing streak as growth outpaced value.
We sure needed that. The market has been in a downward trend recently, but last week's finally bumping positive, and today's futures might be a good sign. We'll see.
And the markets in Asia ended higher, but trading was thin as Greater China and South Korea were closed. And Europe also higher at midday, led by about 1.5%.
Great news, like I said in my little monologue in the beginning. It's a global economy, global markets moving together. If they're up, chances are we could be up today too.
Hopefully. Treasury yields are modestly lower across the board as investors await Tuesday CPI print for August.
Nothing major there. That's the Fed. That's the Fed is the big news we're waiting on. Bitcoin
continues to rebound about plus 4% pre-market and back above $22,000. And I'm not sure I know how to interpret that.
I really don't follow Bitcoin because I don't use it with my clients. So as you've read it is probably accurate, I'm assuming.
And gold is what they're saying is a plus 1%, and WTI crude is a plus 0.7%. The year-to-dates on the S&P 500 is a minus 13%, a Dow Jones a minus 10%, and NASDAQ a minus 22% year-to-date.
Still not great, but better than last week. And who knows, this week may be positive.
Slowly, very slowly improving.
Yep.
Oh, thank you for staying with us. We are going to be switching to our program called Your Money, and Paul usually has an interesting topic. Stay with us. And thank you for staying with us on our show called Your Money. Paul has got an interesting topic. You're being careful of your lifestyle creeping and threatening your financial future. What have you got to say, Paul?
Thanks, Ron. As your income increases, your spending habits may have a tendency to go up as well. It's a phenomenon known as lifestyle creep. Though it's a natural inclination to want to spend more as your funds go up, it's important that it doesn't impede your ability to protect your long-term financial security. So, if you're making more money, but your expenses are notably higher than they were before, or your savings seem stuck in neutral, it may be time to reset your spending habits. So we're going to go over 3 steps to help you avoid or reverse lifestyle creep. Step number 1, assess your current spending patterns. Now, one way to identify whether lifestyle creep is a reality for you is to compare your expenses and saving strategies to a point in the past, say maybe 1 or 5 years ago. Review checking account statements from then compared to those of today. You should be able to detect whether in that time your spending has changed significantly. Also, review how much you are putting away in savings, your bank accounts for emergency needs, your retirement accounts, and toward any other savings goals. Has that number improved or declined in the past year? This can tell you a lot about whether lifestyle creep is threatening your future goals. Step 2, establish a target budget and stick with it. Creating a monthly budget provides you with guideposts on how much you should spend. It also helps you prioritize what's important. Lifestyle creep often occurs when we become too fast and loose with our money, spend impulsively, or simply get careless about spending. Budgeting can help you put parameters around what is justifiable spending and what expenses most likely prove unfulfilling. Step 3 is increase savings where possible. One primary reason to investigate the potential for lifestyle creep is to determine ways to enhance your savings strategy. If you are employed and can participate in an employer's retirement plan, be sure to do so. If the employer offers matching contributions, it's important to fully capitalize on it. An ideal target is to set aside at least 10% of your gross income in retirement savings. That can include a Roth IRA, where you can build a source of retirement income that can qualify for tax-free withdrawals. Also, be sure to boost your savings when you receive a raise, or at least to keep pace with inflation. Having a financial plan in place is a good way to put the damper on lifestyle creep. An up-to-date plan can help you establish a savings regimen that will keep current spending in check and keep your long-term goals on track. Of course, your financial advisor and your tax advisor can help you with these things, but having that plan is critical for anyone who's investing.
What if someone has a budget and they walk into a store and they see a piece of furniture that's 10% discount or 20% discount, and they love that piece, and now they've went over their budget? That can walk you into trouble. You don't need a financial advisor to tell you did the wrong thing.
Right? That's the lifestyle creep. You start making more money, you start spending a little more, and it creeps up on you.
That's my point. That's the creep.
Yep.
You get caught in these kinds of things. Paul, if one needs some advice, can they talk to you?
Absolutely. You can call me directly at 708-226-3412.
All right. Thank you again, Paul. For Paul Munichel with Ameriprise Financial, myself, Ron Jankowski with Channel 4 and Pale Sites, we wish you good investment day.